Hey guys, how's it going? Value Venture Investing here today. So, Apple has released their Q4 2021 earnings results. And the story pretty much is a mixed bag, but there's a lot of talk about supply constraints, potentially looming inflation. So, taking a look at the stock, as of recording this, it's down about 3.6%. Not a huge hit. It was down a little bit more than this previously, and of course it was up quite a bit today, so not that big of a hit. So today we're going to be, of course, looking at Apple's results. I think this is going to be an interesting one for you guys to watch, especially if you're just interested in the markets as a whole, because there's a lot of things here that translate to many different stocks as well. We're going to quickly go through their financial statements as well, and then I'm going to give you some insights in terms of what I heard on the conference call in terms of guidance going forward, what the holiday quarter is going to be like, and beyond. So, revenue is $83.4 billion. Now, expectations were pretty high. This is versus $84.69 billion. So, of course, it was a mess. And we don't see Apple missing that much. However, when you see the growth that they've had lately, I'm kind of thinking to myself, these analysts, where are they getting these expectations from, especially what's going on? Because, of course, this was a September record, and it's up 29% year over year. So they just keep growing. Now, in terms of supply constraints, I mean, this has been kind of the news lately. Inflation, supply constraints, mainly chip shortages with Apple, they were saying. They're seeing about $6 billion hit there because of these supply constraints. So, of course, that's going to translate into the stock. But take that into account. I don't know if these analysts were anticipating that much as well. But that's a huge amount of money, and so that's an extremely strong quarter that would have been even stronger. Earnings per share was $1.24. The expectation was $1.35. Again, a bit of a miss there. Gross margin was 42.2%, which sequentially is down slightly from last quarter, but that's mainly due to mix issues and costs, of course, and we're seeing costs go up in a lot of places in the economy. The iPhone revenue was $38.9 billion versus the expectation of $41.6. Again, that's one that is focused on a lot. And I'm saying, we should be focusing more on services going forward, but we'll get to that. But still, keep in mind, year over year, that's up 47%. Like the growth, and we'll look at the geographic segments after this as well, is phenomenal. I mean, the rebound of Apple compared to when we were seeing some issues potentially in China a couple years ago here now, that's phenomenal. iPad revenue was $8.3 billion. It was actually a beat versus 7.16%. That's up 21% year over year. Keep in mind, in these, we have that new M1 chip. We're going to be talking about that slightly as well. So that's going to be driving that, although going forward, there's going to be some surprises with the iPad, and we'll talk about that in a bit. Mac revenue. Now, of course, this one was actually a miss at $9.2 billion versus $9.31 billion. And they didn't mention the year over year, and the year over year was only about 1.6% growth. However, even though this one is not growing that fast, the last 5 quarters of Apple, the last 5 quarters were the best ever for the Mac. And if you haven't been paying attention to the Mac, and what's going on specifically, I think it was about a week ago here now, they released their M1 Pro and their M1 Max chips. So basically those are a step above the M1 chips. Unbelievable. So these are game changing in terms of power and performance. Of course, these are really new. Some of the reviews are just coming in right now. I'm watching them. But in some cases, the M1 Pro and definitely the Max, which is coming out as well, are 2-3 times as fast in terms of CPU, up to 5-6 times as fast in terms of graphics compared to their top of the line ones before, and they're doing it in many cases with like half the power. So these are a really big deal. They're going to blow the doors off everything. So expect to see this to continue. I, of course, am more interested in the transition Apple's going to go more towards services and maybe give them a higher multiple. But if you are a little bit disappointed with this miss and this 1.61% over year, watch out, that's going to come up as well. Services was $18.3 billion, which is actually a beat versus $17.57 billion, just massive. And again, like I said, that's what's going to be the driver of the company. It's up 26% year over year. This one was a little bit disappointing, but of course they just came out with some new AirPods, so we'll see how that happens over the holiday quarter. $8.8 billion in revenue versus expectation of $9.28 billion. So, of course, a little bit of a miss there. Cash, we're sitting about $191 billion. Of course, we never have to worry about cash with Apple. Their goal, CFO is saying, is to become cash neutral over time. So hopefully we're going to see that maybe translate into some more products, the Apple Car. And in my opinion, going forward, that's probably what's going to drive the stock up, because we might be range bound a little bit in the stock price with these types of earnings. So right now, let's take a look at the financial statements really quickly here. So taking a look at their income statement here, of course, this is 3 months ended, so this is a quarter on a year-over-year basis, September 2020 versus September 2021. So I like that year-over-year basis comparison. It's not sequential here. Net sales, of course, total net sales are $83.3 billion versus $64.6 billion. They're missing estimates, but look at that growth year over year on a quarter. That's actually taking the stock down a bit, even though we do see the stock fall when they beat as well. Gross margin has actually increased as well. I said sequentially it wasn't up, but year over year we're about $35 billion versus $24 billion there. I always take a look at research and development, because of course this is going to be the lifeblood of the company, increasing as well. $5.7 billion in a quarter versus $4.9 billion in a quarter a year ago. So I actually hope to see that continue up. Dropping down to the bottom line here, net income was about $20.5 billion for the quarter, and look at that growth versus $12.6 billion a year. And of course that translates into a diluted earnings per share of $1.24 versus 73 cents a year ago. Also keep in mind, not just the profitability of the company, they are buying back shares as well. That's why below here they show the shares used in computing earnings per share, because that's going to boost your EPS, your earnings per share. Net sales by reportable segment. Now, they talked about this on the conference call as well. They were kind of bragging about it, and they should. I mean, there's not a slowdown anywhere. Every single geographic segment is up. America's $36.8 billion versus $30 billion. Europe, $20 billion versus $16.9 billion. Greater China, which is the one that we were concerned about quite some time ago. Look at that. It's almost double from what it was a year ago. Japan's up almost $1 billion. Rest of Asia Pacific is also up about $1 billion. So again, that gives us our total net sales of $83.3 billion versus the $64.9 billion we saw a year ago. Now breaking these down by the category, people were always concerned about the iPhone growth, but look at this year over year, $38.8 billion in revenue versus $26.4 billion a year ago. That's a huge increase. Mac, like I said, isn't up very much, $9.1 billion versus just over $9 billion, so it's about 1.6%, but we're going to see that grow significantly. iPad growth has been phenomenal. We're going to talk about what this is going to be going forward here, but it's about the last quarter here was $8.2 billion versus $6.7 billion, so huge growth, but that might be slowing down slightly. Wearables, home and accessories year over year is actually a huge increase, $8.7 billion versus $7.8 billion. So even though we saw that miss quite significantly in terms of the analyst expectations, it's still a huge amount of growth. And then the big daddy here, services, $8.2 billion versus $14.5 billion. And again, that equals up to our total net sales down below. Now, in terms of the balance sheet, we're going to go over this pretty quick. There's not that much that's super interesting here. Again, guys, here you always remember that you have short-term and long-term assets here. So they have cash and cash equivalents, of course, about $34 billion in cash, $35 billion roughly. And that's just in cash. They have short-term marketable securities, and then they have some that are classified as non-current, so those are more long-term. And that's where you come up with that $191 billion in cash, right? You don't just look at the cash itself. In terms of the cash flow statement here, not too much interesting. I did notice that the purchases of marketable securities, they did purchase a little bit less there, but nothing too significant. In terms of financing activities, of course, they've upped their dividend, so it's about $14.4 billion versus just over $14 billion a year ago. And of course, they continue to purchase more stock, and that's part of their capital return program here, $85.9 billion versus $72.3 billion. So again, at the end of the period here, cash and cash equivalents was about $35.9 billion they're sitting on with cash at this time. So in terms of the conference call, it was pretty much all about guidance. There wasn't that many great questions, and they weren't that transparent with a lot of stuff. But in terms of going forward guidance, they're again not giving guidance because of what's going on in the world right now, so they're not too sure. Although they did make some hints that they do expect extremely high demand going forward, but now they're concerned about those supply constraints. So basically, they're saying there's kind of a mix between the two. We're seeing huge amounts of demand, but the supply might be hampered a bit. So specifically what they're talking about here, they're expecting a larger revenue in the next quarter, the holiday quarter, the December quarter. But again, they're going to have these supply constraints. We're seeing this supply chain issue show up everywhere. It's a result of what's been going on, and I think personally it's going to get worse. They're saying, we had $6 billion this quarter. They're saying more than $6 billion. But keep in mind that the next quarter is the big quarter. That's where they have more revenue. So of course it's going to make sense that the number's going to be bigger. But they're hinting that it's going to be significantly bigger than $6 billion that they're not going to be able to deliver on. They do talk about the demand, the people that they will wait for the products. There's a lot of questions on that. So it might just be a matter of shifting the demand forward or whatever, right? But that remains to be seen. So demand's there, but again, supply. So large year-over-year growth and a new revenue record is basically what I just said there. So they're expecting for the next quarter it to be an all-time record again, and again they keep setting all-time records whether or not they're meeting the analysts' expectations, but huge. And of course they're going to say they're going to have growth in absolutely everything except for the iPad, which I found surprising because the iPad's been doing so well. But you got to keep in mind though that they have that new chipset in there, the M1, and they're saying the reason that they expect that to not be amazing next quarter is because of again supply constraints. But it was just kind of interesting that it said specifically the iPad and they didn't mention anything else. The other one that might be taken as slightly negative is services of course are going to grow, but they're expecting the growth to decelerate. But again, look at the growth, it's been pretty significantly insane. So they expect that to accelerate next quarter. They didn't really add on to that too much, so that's something to be watching going forward, because again, I think this is what's really going to drive up the multiple of the company and drive a lot of the growth of the company before we get into other things, which might be the things that actually push this stock forward. So if we get some more news on the car, different product categories, if we don't, I think it might be kind of range bound. So this is kind of indicative of the economy as a whole, and personally what I think is going to happen, I think, and it's just basic economics 101, with the amount of money printing going on, we're going to see a lot of inflation. And Apple even talked about a little bit of the prices of some of their components going up. So again, I don't necessarily think it's horrible for the stock market right now or Apple, especially Apple has a lot of pricing power, but I do think massive inflation is ensuing. And then also we have all these labor issues to contend with, and that's a very big topic. If you guys want me to do a video on that, let me know. So this might stick with us for a little bit, but regardless, it was a great quarter, even though it didn't meet the analyst expectations. So I'd love to know what you guys think, maybe even specifically about inflation. Do you think this is going to be a huge issue going forward? Do you think it's going to impact Apple a lot? What do you think about the holiday quarter coming up and the supply constraints that might ensue? So anyway, guys, that's going to be it for today. Hope you have a great one. I'll see you in the next one.